It's 10:47 p.m. Thursday's night. We had a high resistance day actually. I felt like it, but after the fact, everything was so clear. I feel so dumb now. I'll start with the 15-minute chart. So, what happened is in London, let's start with London actually. In London, midnight open, after midnight open, the very next candle swept all those highs. So, there's no business up there. Then, London fails to take the low, making equal lows here. Then, continues lower, digs deeper, deeper, deeper. Eventually, fails to take this low, and we have a breaker here. So what does price do? uh, it just climbs up after the opening. So that's our Thursday's opening range from high to low, this one. So at the macro time, price just fails to take the Wednesday's low. Actually, I was so inclined that Wednesday's low's gonna be taken. I was blind to the fact that it could retrace upwards, and I I missed on some of my rules because of that. It was obvious like the low should be taken, but it did not take it. Instead, it followed up to the middle of breaker or upper quadrant of breaker. And how do we know that market's gonna reverse from here? First sign is breaker. Second sign, it had a SMT with ES on 1 minute chart. ES made a higher high, but Nasdaq failed to make a higher high. That was a obvious indication. And 1 hour and 4 hour chart tells a really good story here. In 1 hour, we had a fair value gap above our equilibrium. That means in premium. Let's take this actually. See, just above our equilibrium we have a fair value gap. That's a premium fair value gap, and all those big long wicks are also gaps. We're going to measure that wick, draw a retracement at the equilibrium. Price exactly touches the 50% of it, as this wick also matches this fair value gap's 50%. Likewise, in 4 hour, it does the same thing, rejecting 50%. It cannot be more better than this, that it's gonna reverse. And also, it's the time of lunch reversal. Let's jump into 1 minute. Also, what time it is? It makes the high around 10:40. That's the macro time. Engineers liquidity to go down this week. That was a crazy one. Hopefully I wasn't in any trade. So it was obvious actually. Fails to take the low, market climbs up, rejects breaker, rejects 1 hour fair value gap, rejects 4 hour fair value gap, then comes down, like also just filling 50% of the gap. Fails to take the upper quadrant, shows weakness, of course. 50% filled as it should fill 70% of the time. Then it comes down, rolls over the first presented fair value gap, retests it, rolls down. Before talking about afternoon, let me clear some doubts here. So market opens at 9:30 here. Our first presenter fair value gap was on 9:37 candle. I mark it. I see a long wick. I mark the long wick. Market rejects 50% of that long wick. Good indication, but still, I cannot ignore the fact that Wednesday's low is so close, and why it wouldn't take it. It took it later, I mean, but I was looking for like down trades, maybe here. I forgot that I have to wait for macro. At macro, it climbs up to the volume imbalance, daily volume imbalance actually, comes down, giving us a BPR. This candle, I would have shorted it here, but I did not actually because I have a fair value gap here. Market comes down, wicks do the damages, look at the bodies closing above it. Market climbs up, comes down, climbs up, closes just above that BPR. Then the next candle digs into it and boom, climbs up to the breaker or to the lower quadrant of the gap, these eyes. Anything could be a target, but at any perfection, I would not take this trade. It's better to stay away from it. It's a high resistance run, really high resistance run, and I don't know which direction market's gonna go. So after market climbs up, I know that it's not gonna take the lows yet, but it's gonna work up there and then take the lows later or just climb up. But we had some indication that it's gonna reverse, so it reversed. We waited, actually I waited for the reverse. Then first presented fair value gap, gave a good move to the downside. After 130, I started looking for afternoon setups. For this, I'm very strict. Actually, it could be before also, but after 130, it's what I try to get. This 1 minute fair value gap keeps getting rejected. We have some sell side here, 1, 2, and 3 highs. Sorry, buy side here. Market takes the buy side, almost fills the fair value gap, comes down, change in the structure, market structure, comes up, there's our entry, climbs down to what level? That's our Tuesday slow. Then again climbs up to what level? To the measuring gap, 50% of the range. Or we have that breaker. High, break the low, and that low becomes the breaker. Come back to the breaker, drops down. Taking daily lows here. We had 2 or 3 daily lows from last year. It takes them. Let me mark the breaker here. Well, it couldn't be more better than this. Afternoon session was really good. Low resistance runs. Like easy. If we target this low, it's easy. How many handles? 68. If we target these major lows, like Tuesday low, no, Tuesday ones, maybe Tuesday was this one. Yeah, 81. The other previous lows, 132 handles. I mean, why would we need these many handles? 30, 40 are enough, but still we had a good chance there. Still, this fair value gap still being respected here. Comes down, all the consolidation, we were not part of it, that's fine. So this wick provided good confluence. The market's gonna go up, but of course it's better to stay away from these conditions. There's clearly high resistances, don't want to go anywhere, and we had a low that was very close to it, and actually we should wait with them, and we should talk to the market like what it actually want to do. Comes down, afternoon was beautiful. That's it actually. Is there anything else? That was it actually. I also had that Wednesday's fair value gap marked, that first presented fair value gap. Market gave good rejections of it. 50% lower quadrant, then again comes back down, digs into the 50% before climbing up, digs into a these old levels work well actually. So that's it for today. Peace.